And now we are joined here by America's Gold and Silver Executive Vice President Oliver Turner is standing beside me. Welcome.
Thank you very much, and it's a pleasure to be here today.
It's good to have you here. I thought you could begin by explaining a little bit about who America's Gold and Silver are.
Yeah, happy to. So America's Gold and Silver is a company that's focused on our primary asset in the panhandle of Idaho in the United States. We're located in the Silver Valley. Our primary asset, Galena, is a historic mine that's been in production actually for over 100 years, and we'll probably have another 100 years of mining history ahead of us as well. Very large complex that we recently took over as a mining team and a management team. We are investing a significant amount of capital in the asset this year to scale production back to historical levels. So that's our focus at Galena, which is predominantly silver, but some other metals that we'll talk about as well. We also have the Coastal mine down in Mexico, which is producing 2 to 2.5 million ounces of silver per year going forward, and is producing today as well. And then 2 non-core assets in Relief Canyon and San Felipe in Mexico.
And thus far, being here at Nordic Funds and Mines, what are your impressions?
Yeah, it's been great so far. Actually, we've encountered several people that we didn't even know were investors quite yet, which is fantastic. Always a pleasant surprise. A lot of interest, obviously, in precious metals, as well as the antimony that we have at Galena, which is becoming more and more of a story. So it's been a really strong reception, and certainly think we'll be back next year.
So let's talk a little bit about your company, Galena Complex, and etc. First of all, 80% of your revenue is currently sourced in silver. Considering that silver is seeing quite the bull run, how has that sort of changed both internal and external interest for the company?
Yeah, no, absolutely. Look, I think we're all very happy to be in the silver mining business at this point in time. It's been a wonderful rally, and I think there's certainly legs for it to go much, much higher. So we've seen tremendous investor interest, obviously. In the last year alone, we've taken institutional ownership of our story from 7% all the way up to 63%, which is reflected, obviously, that people want to be part of this story, part of this management team. We had 2 very strong prior successes at Karora and Klondike, and we've had those investors follow us in. On the silver side, we've had a lot of new generalist investors also knocking on our door, wanting exposure to a silver miner. And when you've got a long history of producing silver in the U.S., this is one of the stories that they definitely want to get more up to speed on, and they want to understand how things are changing under this new management team and what we're doing differently. So that's been great. And then, internally, it's a good question. In terms of our staff and miners and people in the Silver Valley, this is a mine that struggled for the last several years under lower metal prices and a different team. We've definitely changed that with a team that we've brought on board, obviously these metal prices, and a new strategy and new capital going into the operation. So a lot of local interest. Certainly people are excited to be mining silver and the other metals, which we'll talk about, and lots of investor interest. And obviously you've seen a very strong share price return this year that's reflected that.
100 more years of mining. How certain are you of that timeline? Yeah,
no, it's a good question as well. Look, we've got 177 million silver ounces in resource right now. This mine, the first mining actually happened in the late 1800s. We've got $2 billion worth of infrastructure, 4 shafts, 120 miles of underground development in place right now. And currently, we are only half the depth of Lucky Friday, which is Hecla's mine, which is only 6 miles away, mining the exact same system that we are. And we certainly believe that this system is going to extend to depth. So I would say with 177 in resource right now, with up-dip potential and, of course, down-dip exploration potential, there's certainly a high likelihood that this thing will be going for a long period of time.
Do you see silver still being your main revenue pillar moving forward and in the longer term?
I mean, we're absolutely a silver-focused company, and as you mentioned before, we're over 80% silver exposed, which is quite unique in the silver space, actually. Most silver miners are more exposed to other metals. But one of the most interesting things that we have at Galena are our byproducts. At Galena, we have silver, we have copper, we have gold, we have lead, and we have antimony. And there's 2 types of ore at Galena. There's silver-copper ore, which has the silver, the copper, and the antimony, and there's silver-lead ore, which is obviously where the lead is hosted and some of the gold. Now, from an antimony perspective and from a byproduct credit perspective, and obviously with what's happening in the U.S. right now, especially with where antimony prices are, that is becoming more and more interesting. Over the last 10 years, this company has been penalized for its byproducts, with the exception of silver and lead. Both copper, gold, and antimony have all been penalty elements. 3 months ago, we renegotiated that contract with our off-takers, Teck and Ocean Partners, and we are going to be getting paid for those metals for the first time ever starting Jan 1, 2026. So when that kicks in, you're going to see more and more revenue coming from this antimony kicker, which at these Rotterdam antimony prices are absolutely phenomenal. And the important thing for investors to note is that that comes at zero additional cost to America's gold and silver shareholders. We are already mining this ore, which carries the silver, the copper, and the antimony. We're already processing the ore and concentrating the ore, which includes the antimony and the copper in it. We get 99% recovery of that antimony out of concentrate. And over the last 20 years, over 20 million pounds of antimony has been produced at Galena. So all that comes with what we're already doing, which yields very strong byproduct credits. And as you mentioned, a revenue split that is leaning more and more towards some of these other metals.
And for the longer term then, antimony, very interesting. Where do you see that place in the revenue share? Do you see 50%, 40%?
All depends on your pricing and where we end up taking it from a productions basis. One of the important things with antimony is, and we put some press releases on this year, is that the ratio of antimony to copper is about 0.7 to 1. So for every pound of copper that we bring out of that mine, 0.7 pounds of antimony comes out of the mine as well. So as we're scaling silver production, copper and antimony scale with it. Depending on the metal price that you put in, that could be up to 20 to 30 to 40% of revenue coming from antimony moving forward. It is certainly very valuable, and none of that value has been captured in the share price just yet.
Talking about the ground then in Galena, you mentioned both up dip and down dip potential, and I'm curious first towards the up dip. What are the challenges of unlocking that ground, and what do you know about it?
Yeah, so at Galena, basically all of the drilling has been done below the 2200 level. That's historically where most of the mining has been in a formation called the Revit Formation at Galena. And you look elsewhere in the valley, whether it's over at Sunshine, Bunker Hill, over at Lucky Friday, most of the ore and the veins that have been mined historically have been below that level. However, interestingly, there has been some drilling completed above it, which has drilled off some interesting intercepts. What we're going to be focused on moving forward into next year and the years after with an expanded exploration program is, can we drill off that upper area from underground, which is easier than from surface? And the reason why, that might not make sense at first to most people, the relief, or what I would say, the topography in the Silver Valley is very, very steep. So sometimes cutting these drill roads and drilling from surface is harder than it is when you have all this infrastructure underground. So we're going to drill off from underground first, see if we can extend the ore body up dip. In other areas in the valley, there has been ore found in this other formation. If we can do that, then we can start bringing in some of the surface drills and really drilling it off. And look, if we can drill off some resources up there, drive a decline in from surface, much wider access decline, that's just additional tons going to the mill at even lower cost. So really exciting for us to be drilling there. We're looking forward to some of the results.
What about the down dip potential? What do you know about the ground there?
Yeah, no, look, I mean, the entire valley goes extremely deep. At Lucky Friday, they're twice the depth that we currently are at. They're mining at a 10,000-foot depth with 100% UCB method, modified long hole. And they've got wider veins, higher grade veins down there as well. We certainly know that the ore body continues down dip below what's called the Caliday, where we already have a shaft in place, part of the advantage that we have. And that's where we're going to be drilling below our feet. We've done some drilling towards the bottom side of our mine right now, which has yielded some phenomenal results, such as in the 34 vein, we drilled 983 grams per ton over 3.4 meters. In the 149 vein, we drilled 24 kilograms per ton and 17% copper. So some phenomenally high grades. Galena is already one of the highest grade silver mines in the world. Our average head grades are around 400 and 450 grams per ton, and we're looking potentially to bring it back to the 2002 record level, which was over 700 grams per ton. So lots of opportunities within the mine, up dip, and especially below our feet, and we know that our neighbors are mining there quite happily.
And for investors who are curious about America's gold and silver, what should they look for?
Yeah, I mean, look, we've got some exciting catalysts coming up over the course of this year. We're going to continue doing work on the resource update. We're going to have our first resource update under this management team coming out later this year, reflecting a lot of the exciting drilling that we've been doing, which we're excited to get that out. Next year, 2026, we'll put out our guidance for the market so they can see where we're going to take production, and we'll be able to talk more and more about the growth plan that we have to get back to that 5 million ounces per year and beyond. We also have a lot of new additional equipment going underground. Been taking some of these long hole stopes. We'll be updating the market on that. We've got the construction, engineering construction, and of our paste fill plant, which will be going in. And then, of course, look, you can't ignore antimony in this day and age, specifically with what we're seeing some of the headlines around the sector. So we'll continue to keep investors updated on the antimony, and then looking really forward to reporting some antimony production numbers.
Thank you very much, Oliver Turner, Executive Vice President of America's Gold and Silver.
Thank you very much.